Have you checked your bank account and wondered if your CPP or OAS payment is enough to keep up with rising prices? Or maybe you're about to retire and asking yourself, will these government benefits really cover my needs? Well, June 2025 brings news you absolutely can't afford to miss, and I'm here to break it down in plain, honest language. This isn't just another routine update. There are real changes to how much seniors across Canada are getting paid, and how much they could lose if they don't stay ahead of the rules. Waving hand, I'm David, and on this channel, I make sure Canadian seniors get the facts, not fluff, about CPP, OAS, GIS, and everything you need to enjoy a worry-free retirement. If you find this kind of info helpful, go ahead and tap that like button and subscribe. It truly helps me keep making these videos for you. Now back to what really matters, your money. In June 2025, CPP and OAS benefits are being adjusted once again, but this time, it's not just a small bump. The CPP enhancement continues to evolve, which means future retirees will get more, but current retirees may not feel much change, at least not directly in their payments. However, there's a hidden impact. Your total income might now affect your tax bracket and eligibility for GIS and other benefits. And here's where it gets more interesting, or more dangerous, depending on how you look at it. The OAS clawback threshold has increased again. If your annual income goes above $90,997, you start losing your OAS, and if you cross around $147,979, it could be gone entirely. That's why it's so important to know how CPP, RRSP withdrawals, part-time work, and even selling an asset can unexpectedly push you into the danger zone. Also, OAS payments for those aged 75 and up remain higher, and there was a 0.8% increase in April 2025, holding steady through June. But what happens in July? That depends on inflation data, and I'll tell you exactly what to expect later in this video. And yes, GIS payments are also changing, especially for low-income seniors. If your income is even slightly above the threshold, your GIS could be reduced, even if your CPP just went up by a few dollars. Look, this isn't just about more money, it's about keeping what's yours. So, should you take CPP early? Delay withdrawals. What if you're turning 75 this year? When does your OAS go up? All of that is coming up next. Stick with me, because in the next part of this video, we're going deep into the numbers, strategies, and dates that could protect, or cost, you hundreds each month. As we approach June 2025, significant updates to the Canada Pension Plan, CPP, and Old Age Security, OAS, are set to impact Canadian seniors. These changes aim to enhance financial security for retirees, but understanding the specifics is crucial to ensure you're maximizing your benefits. The CPP enhancement, initiated in 2019, continues to phase in additional contributions, increasing the amount working Canadians will receive upon retirement. By 2025, these enhancements will have been fully integrated, resulting in higher monthly benefits for future retirees. However, current retirees may not see immediate changes in their payments, as the enhancements primarily affect those who began contributing after 2019. In addition to the standard CPP benefits, several new provisions have been introduced to support specific groups. One notable change is the introduction of a new child benefit for part-time students aged 18 to 24 who are children of disabled or deceased CPP contributors. This benefit provides financial assistance to help cover educational expenses, acknowledging the unique challenges faced by these students. Another significant update is the increase in the death benefit. For contributors who pass away before claiming their retirement or disability pension and leave behind no spouse or common-law partner, the estate will receive a top-up of $2,500, bringing the total death benefit to $5,000. This change aims to provide additional financial support to the deceased's estate, assisting with funeral and related expenses. Furthermore, eligibility for the Disabled Contributor's Child's Benefit, DCCB, has been extended. Previously, children of disabled contributors lost eligibility for this benefit once the parent reached age 65. Under the new rules, children will continue to receive the DCCB even after the parent transitions to a retirement pension at age 65, ensuring uninterrupted support. It's also important to note that the CPP survivor's pension provisions have been updated. The survivor's pension provides income replacement to the spouse or common-law partner of a deceased contributor. However, entitlement to this pension following a CPP credit split has been ended. This change ensures that individuals who have separated and requested a credit split will no longer be eligible to receive a survivor's pension for their ex-partner, aligning with the treatment of divorced or former common law partners. Transitioning to old age security, the OAS program provides a monthly payment to seniors aged 65 and older. Unlike the CPP, OAS is not based on an individual's work history but rather on residency and income levels. As of June 2025, the maximum monthly OAS payment for individuals aged 65 to 74 is $713.34, while those aged 75 and older receive a higher amount of $784.67. This increase for seniors aged 75 and over was introduced in 2022 and continues to be part of the system in 2025, recognizing that older seniors often face higher healthcare costs and increased living expenses. OAS payments are adjusted quarterly based on the Consumer Price Index, CPI, with adjustments occurring in January, April, July, and October. The most recent adjustment in April 2025 resulted in a modest increase of 0.8%. The next adjustment, scheduled for July 2025, will depend on inflation data from the spring months. However, it's essential to be aware of the OAS clawback, officially known as the OAS recovery tax. This applies to higher income seniors. If your net annual income exceeds $90,997, you will have to repay part or all of your OAS pension. The amount you repay depends on how far your income is above that threshold. The full OAS pension is clawed back when income reaches around $147,979. This means that careful planning of your income sources is crucial to avoid unexpected reductions in your OAS benefits. In addition to these updates, the Guaranteed Income Supplement, GIS, plays a vital role in supporting low-income seniors. GIS is a non-taxable monthly benefit for individuals who receive OAS and have a low income. The amount of GIS you receive depends on your income level and family situation. As of June 2025, the maximum monthly GIS payment for a single senior is approximately $1,654.70, while for couples, each spouse can receive up to $641.35, depending on their combined income. GIS is income tested, meaning that any additional income you receive, including CPP, RRSP withdrawals, or part-time work, could reduce the amount of GIS you are eligible for. This creates a situation where earning more could sometimes result in lower overall income due to reductions in GIS and other benefits. Therefore, it's crucial to carefully plan your income sources to maximize your benefits. One important aspect to consider is that the GIS amount for the period from July 2025 to June 2026 will be based on your 2024 tax return. If your income in 2024 was temporarily high due to one-time events like selling a property or cashing in investments, you can apply for a GIS recalculation using the Statement of Estimated Income form. This allows you to provide a more accurate picture of your current income, potentially increasing your GIS payments. As we approach the payment dates for June 2025, it's important to note that both CPP and OAS benefits are scheduled for deposit on June 26. If you're enrolled in direct deposit, your payments should arrive without delay. However, if you're still receiving paper checks, there could be delays, especially if there are postal issues or holidays. If you're not yet enrolled in direct deposit, it's highly recommended to register through your My Service Canada account or by contacting Service Canada directly to ensure timely receipt of your benefits. Finally, it's crucial to remain vigilant against scams targeting seniors. With more seniors online and receiving benefits electronically, scammers are increasingly targeting retirees through phone calls, emails, and text messages claiming to be from Service Canada or other government agencies. Remember, Service Canada will never ask for your social insurance number, SIN, banking information, or credit card details over the phone or email. If you receive such a request, hang up and call the official Service Canada number to verify the legitimacy of the communication. In conclusion, the updates to the Canada Pension Plan and Old Age Security in June 2025 bring both opportunities and challenges for Canadian seniors. By staying informed about these changes and planning your finances accordingly, you can maximize your benefits and ensure a secure retirement. If you have any questions about your own situation or want us to cover a specific topic, leave a comment below. We love hearing from you. Thanks for watching, and we'll see you in the next video.